Hey guys, welcome back. So I'm just going to apologize right away for not putting out any videos this past week. I'm just getting over a cold, so you might hear my throat still. I was definitely not in the position to, be shooting any videos here on YouTube. I could barely talk some days. And I've also just been swamped with work. So I just started a new co-op. I, have been focusing on building up my new PC that if you guys want, I can put a video about, me assembling it and putting it all together when I get the parts in. And I also have had multiple competitions for my startup. So I just have not had a lot of free time and I've been sick. So, YouTube kind of got the shaft over the past week, but, I'm feeling better. Those things are kind of subsiding now. So hopefully I'll be able to put out regular content here on YouTube for you guys. So in this video, I wanted to give a quick update with my channel portfolio. And now for those of you that don't know, if you're just finding my channel recently, the channel portfolio that I came up with back in say October of last year was a proxy account. So it's not my real money and it is in no way, shape or form financial advice or recommendations or a model portfolio that you should, model your investments off of. Don't take it like that. This portfolio was built based off of the things that I talk about here on YouTube. This doesn't even directly reflect the things that I do with my own personal money, but it is something that is just kind of putting my ideas to paper so that way we can kind of track my videos without having to go through each one individually and be like, oh, well, you said this then and you said that then. I just kind of wanted to say like, okay, if based off the assumptions I have that I go over, say my hypotheticals here on the channel, whenever I think that one, is most probable that that's what's going to happen in the future, on this portfolio, I say take a position in it with, the paper trading, and I just kind of see what happens over the course of time. So you guys can also kind of see like, okay, are my ideas complete BS? Am I just pulling stuff from thin air? Or, is there some validity to it? So obviously, again, take all of these numbers with a grain of salt, but I did want to kind of, do a quick update on this because I've been doing trades on it, but I haven't been doing, videos focused on it because not a lot of people really wanted any updates with it. I still don't know if you guys really care about this, but I wanted to put out a video and it was something that a couple of people commented on a couple of my videos and, I just haven't put out a video on it. So I figured, why not? If I'm a little sick, hey, if this video sucks, maybe not a lot of people watch it. So I'm going to be going into, the numbers, comparing myself to the S&P benchmark and then also to the growth index benchmark because when you're like me and you invest so much time and you actively manage a lot of your technology plays, generally you want to be more of an aggressive benchmark that you're aiming for. If I'm beating out a consumer staples index with this much risk, who cares? But compared to the overall market and compared to, the companies that are growing quickly based off of, their market cap, I think that if I'm able to outperform those, that's a, a decent benchmark to go off of. So as always, guys, if you enjoyed this comment, make sure to stick around, hit that like button, hit the subscribe button. It really means a lot to me. And feel free to drop a comment in the comment section down below on any type of topic or company or anything like that that you want me to go over in the future. I have experience with personal finance, entrepreneurship, a little bit of real estate, investment banking, anything like that. Make sure to drop it in the comment section down below and either I will try to answer it the best I can or I will see if any of my friends that are say are in different areas in the financial world, whether it be real estate, banking, whatever, I'll see if any of them are willing to come in and chime in or allow me to do an interview with them so I can answer those questions. So if you're interested in that, make sure to drop it in the comment section down below. And without further ado, let's get into the numbers of how my portfolio is performing and then also how that stacks up against the market. Alright, so doing a quick recap, this channel's portfolio started on October 8th in 2018, that's when I made my first video about it, and I started this with $100,000 in paper money. So here's a list of all the trades I've been making since the portfolio's inception. I dated them all, talked about the average price cost. It's generally just the cost that say was open at that given day, kind of not, sugarcoat the numbers or anything like that. Generally what I saw it open that day is what I put in my order on this account, and then, you can kind of see the returns from that. Now, all in all, the addings to this price are either, I've been adding some here and there to companies that are already existing in the portfolio, or, I've traded them, such as, say, Micron, as you can see. Micron, Intel, NVIDIA, all those I sold out of, took losses on NVIDIA, and made a profit on Intel and Micron. That was based off of Intel's last earnings report. But then, With the China trade war news started to really put a damper on things, and the semiconductor companies started to take a massive beating between Intel, showing bad news, and then the whole China thing, possibly being Armageddon for the financial world. A lot of these companies became a ridiculously attractive value, in my opinion. So I did start to buy a little bit of, say, Nvidia and Intel here and there. Not large positions, though. They are still kind of, I'm still more pessimistic on the semi space in the, the future. But I do think that, if we're kind of able to put the whole trade war behind us and things, keep going with the exception of a financial crisis, I definitely think these companies are, undervalued to what's going on with them. And Intel especially is because I think too many people are, while AMD's new product line is amazing and it's what's going to be in my new rig, so as a consumer, I love it, don't get me wrong, I definitely think people are too pessimistic on Intel in that space. So I just think Intel is undervalued right now. Going to other things, though, I did re-enter a Starbucks position after their last earnings report, and now I know what you guys are thinking, like, what the heck, you made a very detailed video about why you sold out of Starbucks, what happened? And so I actually got some guidance on that one. Full disclosure, I talked to a couple of my professors about my investment thesis and why I was selling out of it. One of them was actually the one I spoke to about when I went into it, and that he actually ended up buying some of it in back when that had that major sell-off and the shares were down below $50 a share. I thought that is a streaming buy right there. I bought some, he bought some, and we both hold to this day. Well, I rebought, he still holds to this day. And then one of my other professors that, is a portfolio manager, I pretty much gave them the exact narrative that I talked to you guys here on the channel. And they both kind of gave me a similar answer. And then from two people that have been in the financial industry for a while, they've been investing for, decades more than I have, I decided to really, weigh them, heavier than my own personal, short-term opinion. Essentially because at the end of the day, my thesis on why I would sell out of Starbucks wasn't because the company was falling apart, wasn't because management was running the company poorly. It was because I thought the company had a lot of debt, I thought that it was a luxury product, and I thought we were due for a recession or we were due for rate hikes. None of those things are things that people can accurately predict. If you could, you'd be a multi-trillionaire. So when you look at, my fundamental analysis on the company, I said, like, okay, the company is decently undervalued, but all these risks, I don't want to buy it or I don't want to hold on to it anymore. Based off of, hypotheticals that are almost impossible to predict because they're not company-specific hypotheticals. They are global scale, what's going to be happening tomorrow. And they both kind of told me, like, if you want to play that game, good luck. But they don't know anybody that's played that game and won. So I kind of thought about it. I thought about it for a few weeks. And then, Starbucks came out. They had their earnings report. I read into it. It was decent. Didn't really show any, like, world falling apart type of situation. The stock price started to decline immediately after it. So I was able to get back in essentially at what I sold it at. And then the stock price has been reverting. And a lot of the reason why that stock price has been going up is because people are just banking on a rate cut. Now, obviously, banking on a rate cut is an awful idea for an investment. However, the market is essentially demanding it right now. So you have two scenarios. You have one, they raise rates or don't do anything to rates, and the market's going to take a massive dip anyways. Or two, they actually cut rates. And if they cut rates, Starbucks' value balloons because of the amount of debt they have. And so if you drop interest rates, say if we get that 0.5% cut that everybody wants from the Fed, Starbucks' value at that point on a free cash flow basis will become, $100 to $130 a share, which is stupid. But that is the reality that we're facing. It's stupid that people are demanding a rate cut, in my opinion, but those are the cards that were dealt. So at the end of the day, it was a business I like. The business was still profitable. It has a lot of debt, but its interest coverage ratio is ridiculous compared to its industry. It's something above a 30. So I'm not worried about the company's financial health. So I decided, like, yes, okay, I can buy back into this company. And then, essentially I'm just going to weather out the storm the next time. Because again, this isn't a tech company. This isn't an industry that's getting disrupted all the time. Obviously there's Lookin' Coffee, but this isn't a company that I wanted to really have an active hand in. This is a company I believe in and I like, and I want to hold on to it for long term. So I re-entered my position, and now I'm just going to see what the future holds for the performance of that stock. So now on a little bit more of a risk side of things. So we have Apple, Google, and Tesla. So all these companies I added in because in Google's case, I thought that, people were pricing in the worst possible, rulings in terms of all the data pricing and, different restrictions that are possibly going to be coming in. Because if you don't include those, Google is very undervalued as long as it can maintain, 70% of its current growth over the past couple of years to the next 5 years. It's very undervalued in that regard. So a lot of people are anticipating the worst possible thing to happen from all of this legislation. And I just don't think it's going to be, I think it's going to be in the middle. I don't think it's going to be amazing, and I don't think it's going to be awful. So by that scheme of things, assuming we're able to maintain 50% of what Google has been performing in recent years, Google was undervalued. And I love Google as a company. I could not have gotten through college if it wasn't for Google. So I think that goes for just about everybody in the modern day. So I think Google is here to stay. And so I decided to, add into Google. In Apple side of things, Apple, got hammered a lot because of the whole China trade war issues, but Apple has already talked about moving its product, its manufacturing outside of China. And at the end of the day, Apple, as long as they're able to maintain that Apple brand and that Apple power, I don't think they're going away. And I thought that they were too undervalued based off of the opportunity that Apple has, say, in their services, say, in different product lineups with, say, 5G, with wearables. Wearables, I think, are going to be a massive play in the future. More and more, I've been talking about this since the Apple Watch 1. More and more people I see are getting a smartwatch, and I think that is going to be a staple in the future. I don't think it's going to be, say, as much of a staple as the iPhone was, but I think it's going to be just as popular as, see everybody with the Bluetooth earbuds, like, say, AirPods and things like that. I think that the Apple Watch in time is going to be at that popularity that Bluetooth earbuds are now. So I think that is a big growth driver for the company, and I just thought that they were too undervalued, when I looked at them. And then there's Tesla. Now, Tesla, I made a whole video about this, and thankfully I put it at, like, the bottom, because I guess that kind of showed some validity to my idea, or the market thought that there was some validity to that. Because I talked about how Tesla's, current risk-reward when it was down at like $180 or $200 a share was just so asymmetric. The company, yes, it could go bankrupt, but if any of the possible things that the company has going for it work out, more and more so, in my opinion, it looks like they are going to, at least one of them, like, say, them being a major manufacturer of automobiles in the country, just that narrative, if any of those take off, the company, explodes from there on out. Like, so you have a possible 10 to 20 bagger, or you have a loss of 50% of your capital. I definitely don't think the company's going bankrupt, based off of, what the book value is, and then based off of no other private equity company or, say, Apple type of company going in and buying the company for dirt cheap. I don't think that's happening. I think that R&D is worth a decent amount of money. Who knows how long that will stand the test of time, and who knows how long they're going to be able to innovate on that. But I thought as a spec play, with a company that's growing as quickly as Tesla, like, if you look at their top line growth, it's insane, and the market's giving it a price to sales multiple of 2. So I thought that was a little skewed, especially when you look at any software company that only grows revenue at like 10%, they get between a 5 and a 10 price to sales multiple. So I just definitely thought that Tesla was, too negatively looked on by the market. And thankfully, those shares have gone up since then. Obviously, those shares could have, dropped to the floor when I bought them. But that's also why I made pretty small purchases, as you can see here, when I made those. And then there's Monster. Now, Monster is a pretty interesting company, in my opinion. I think it's pretty much like what Starbucks was 7 years ago. Now, Monster is a company that, has been growing really well. I think it's the dominant player in its respected beverage space. I don't think Coca-Cola or Pepsi are going to be taking them out anytime soon. I think they're going to continue to grow. I think energy drinks globally are going to continue to become more and more popular over the long term. If you know anything about millennials and Gen Z, it's that they don't like sleeping, they love being on their computer, and they love a lot of caffeine. So I think that they have a pretty good, scenario. And as you can see from like Starbucks, obviously people, when they really get into caffeine, they get very addicted to that caffeine. So they're going to be doing, pretty well in the foreseeable future, I think. Now, a lot of people going back after the last earnings report thought that, Monster's, directly prior to their earnings report, they thought that their revenue growth, was over. And I thought that, a company that's growing revenues at a pretty fast rate isn't going to suddenly not overnight. It's going to be a slow wind down, in my opinion. And so I didn't buy into that narrative. And then I did, a discounted cash flow based off of if they were able to, say, maintain 80% of their current revenue growth rate, 100%, or maybe 120% of the current growth rate. Where would the company lie? And the company was more or less slightly undervalued. And I love the brand, I love the management, and the fact that they have a deal with Coca-Cola so that Coca-Cola can't make energy drinks and sell them, I thought were all like, golden. The company doesn't have a lot of debt, so they have that lever to pull and then explode in the future. So there were a lot of positive signs for this company in, going forward. If we get hit with a financial crisis, Monster doesn't have debt, so it's not going to collapse on itself. It's a very high margin industry. Everything looks good. The balance sheet looked good. Management looked good. It was just a good company. But it's charged, from a PE standpoint, it's at a premium. From a discounted cash flow standpoint, it's fairly valued. So I assumed that, the end of the world's not going to happen for the energy drink space. So I decided to put some money into it, not a lot, because it's a company I would prefer to buy at a significant discount. But it's a company that I would like to hold on for the long term. And, I started to add in a small position. And now, how is my portfolio performing? So obviously, as you can kind of tell from the numbers that you've been looking at, my portfolio is outperforming both the S&P and also the growth index. My portfolio has returned a little bit over 11.5% versus the S&P roughly 4% since then, and then versus the growth index of roughly 5.5% since then. So, yay, active management has worked in the short term. But keep that in mind. So very short term, less than a year. If you were doing this, say, in real life and you didn't have Robinhood, you'd be paying commissions and all of that. So also keep that in mind, say like, okay, my results wouldn't be this pristine if I was using, say, a Fidelity brokerage account, because, the commissions would be taken out of it. But on top of that, I also am not recording any of the dividends that I get from these companies. So, that might be a wash here or there. It might be a little up, might be a little down. But in essence, I feel like I should be performing a little bit better with the amount of work I'm putting in, and then also, just kind of, that hindsight 2020, based off of what I've done in the past few years with drastically outperforming the index. I definitely wanted a higher, gap between me and the index. But, the market's been really shaky recently, so I can't complain. So that just kind of goes to show that, hey, maybe I am decent at actively managing, tech stocks. Who knows? We'll find out. But I hope you guys got some use out of this. Hope you guys liked it. This is kind of more entertainment side. Again, this isn't for any type of financial advice. This is just kind of me looking with, big numbers and see like, okay, if I did control a lot of wealth, how would I do? So hopefully that's entertaining to you guys. All right, so thank you guys again for watching. If you stuck around the end of the video, make sure to hit that like button, hit the subscribe button, and I will catch you guys in the next video. Peace.